All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market, which is just slowly grinding along through the end of August, but things will pick up soon. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage as we are working on continuous improvement, right? We want to, like we say all the time, shorten the learning curve and compress time frames. So if we are all set and ready to go, hey, let's do like we always do. Drop me a one in that chat. Let me know you're ready. You can hear me loud and clear, and we can get going with this evening's session. All right. Appreciate it. I see all the ones coming in. Thank you very much. So let's get out of here and get right down to business, right? So we come over to the Forex factory today. We've got German. Preliminary CPI month over month came through out of Germany, 2 a.m. And we see that it came in right at forecast. We see at a, also out of Eurozone, Spanish flash CPI year over year, 2.6 on 2.5. But that is telling me with that data coming out of the Eurozone, I think we are probably going to see at the next the next ECB meeting, at least 25 basis points. I think they are going to hike again. I could be wrong, but with some of the data that's coming out of there on top of these reports coming out, right, we still have to make sure that we get that inflation down to that 2% target eventually. And so I'm thinking maybe one more rate hike while across the water in the United States. Hey, we've got ADP non-farm came through, private sector payrolls came through at 177,000 on a forecast of 194. That's a miss, right? Preliminary GDP quarter over quarter came through at 2.1%, right? On a forecast of 2.4. And we see the trade goods balance came through at negative 91.2 billion. All right. So on top of that, some of the reports that happened earlier this week with the dollar, and we can see that we saw the DXY fall off a little bit as a result, right? So that's the preliminary GDP number, right? We missed 2.1 on 2.4. We can see that it made headway today. U.S. economy grows less than initially estimated in Q2. U.S. private job growth slows to a 5-month low. Right. But we did get U.S. pending home sales rise for a second month, which is surprising to me, right? Those interest rates of around 7%. And yeah, right. So pending home sales. So it increased. So we'll continue to keep an eye on that in the real estate market. Hold on, let me make sure we got some other people that joined us. We are good. So good evening, everybody who just joined us. So let's talk about this for a minute, because if we come over and we take a look at the DXY, we saw that we broke trend line and we finally come back down to that support. Okay, and now we saw what's going on in the private sector. We're looking at the GDP. We saw the JOLTS job openings report earlier, and we saw that less jobs are being created. GDP is falling off a little bit. So we see a little bit of tightening, and we see a correction in the dollar down to test support, right? So we see how that goes. Looking at it from the fundamental side and the technical side, we've got a correction in the dollar, right? It's been moving up pretty strong, right? So now we've got this correction. So it's going to be interesting to see what happens as we move towards the end of the week, right? Friday, September 1st, beginning of a new month, and we have non-farm payrolls. Okay, first Friday of every month, we'll see what continues to happen with the dollar. All right. So let's talk about it. Anybody talk to me. What is GDP? Why is it important? Don't all speak at once.
It tracks the it tracks the overall economic temperature of a country. So the imports and outports, those numbers, it's a combination of those numbers to show the economic health of a country.
Okay. Cool. Anybody else? Thank you so much. Silence. Thank you. Appreciate it. All right. You're on it, right? So let's talk about it. Okay. Let's talk about it. Okay? And we delve into this, right? We just don't talk about, oh, hey, today there's a bunch of red folders, so don't trade, okay? Or be cautious, there's a bunch of red folders. What does it mean? Right? And I'm speaking from experience because that's how I came into the game. Oh, it's a red folder day. Right? So just leave it alone. Joy, service is good. Goods and services measurement. Yep. All right. So we want to talk about this, right? Especially if we're swing trading. We want to talk about this, right? Because we get into these long swing positions. So what does this mean, right? Does it mean I'm going to get an opportunity, right, to see a correction in the market and maybe I can add to my potential setup? What does it all mean? So let's talk about it. GDP, and this is key. Gross domestic product. All right, Joy, JC, own it. It's the total value of all goods and services produced by a country in a specific period of time, usually a year. It's like a scorecard for a country's economic health, right? So we're gonna drop Joy, at least I'm gonna do it, and JC some sevens for participating, right? Giving their definition, because I can dig it. So congratulations. All right. Appreciate it. Teamwork makes the dream work. All right, now. So let's go into this, right? So the report came out, Q2, right? Lagging. Okay. 2023 growth, 2.1%. The initial estimate was 2. Okay. Q1 was 2%. All right. So it came in lower than the initial estimate, just a tick higher than Q1. It's important, right? Because it's not necessarily doomsday. Okay. There were some revisions, right, from the previous report, decrease in private inventory investment and non-residential fixed investment. We'll talk about that. Increase in state and local government spending, right? What does all that mean, right? Okay, so we see that consumer spending slowed to 1.7% in Q2 from 4.2% in Q1. So that type of stuff right there, right? That makes me want to dig deeper and investigate, right? Let me go back and rewind to Q1 and see 4.2%. Now it's 1.7%. Was that seasonality? What was going on, right? As we think our way through it. Government consumption, all right? Growth decreased to 3.3% from 5% in Q1. So what does that mean, right? So let's talk about it, right? I got notes. I got notes tonight, everybody. All right. So let's talk about government consumption. It refers to the total of all government expenditures on current goods and services. It excludes government spending on long-term assets like infrastructure and other capital investments. Instead, it focuses on the day-to-day expenses like salaries of public servants, military expenses, and any public services that government provides directly to its citizens. So let's talk about the impact on the economy and currency. Okay. I'm a geek for this type of stuff. Now, if you'd have talked to me in the 12th grade in high school, my freshman year in college, wouldn't have been the same. Okay. Things change. Stimulating demand. Increasing government consumption can boost economic activity by increasing demand. A decrease in government consumption may lead to a contraction in economic activity if there's no corresponding increase in private sector demand, right? So if the private sector doesn't, it plays such a big role that if the private sector doesn't come in and make up for it, right? So if you see both of them tailing off, it can lead to economic contraction, okay? Job creation or reduction, increase, right? And government consumption can lead to more jobs, especially in public sectors or areas directly impacted by government spending. A decrease may lead to job losses, particularly if The cut is sudden and significant. Okay. Deficit surplus, right? Increase might widen the budget deficit and increase national debt if not matched by revenue increases. Think about what's going on, right? We hear it every day here in the States. Government spending, the national debt. All right. We're spending too much and we're not growing at the rate to sustain that level of spending. Can narrow the budget deficit or increase the surplus, potentially reducing national debt over time with a decrease. Interest rates. All right, so this is what we talk about here. Interest rates and currency value. An increase in government consumption if financed by borrowing. Think about it. It might lead to higher interest rates, which can attract foreign capital and push the currency value. But excessive borrowing can have the opposite effect if it erodes confidence. A decrease may lead to lower interest rates, potentially making the currency less attractive to foreign investors, causing its value to drop. And then we have business confidence, right? So think about that in terms of currency, right? And what it can do, especially during these times in regards to interest rates, okay? So we saw that government consumption, right? The growth, it decreased to 3.3% from 5%. Okay. Non-residential fixed investment showed significant growth, 6.1% in Q2. Stark contrast to 0.6% in Q1. Okay. That's important. Okay. That's important. Why is that important, Benny? It's the money spent by businesses on physical assets that are not residential real estate, to include investments in things like office buildings, factories, machinery, equipment, and intellectual property, right? Like software. It's fixed because these are long-term assets that will serve the business over a prolonged period, unlike short-term expenses like salaries and utilities. Okay. So it indicates business confidence. When businesses spend more on these fixed assets, it often suggests they're optimistic about the future and expect increased demand for their products and services. Well, we saw an increase, everybody. Okay. So while we saw, I'm not going to go through all of this, but while we saw, right, some things to the negative side, okay, this is a big one, right? When we talk about the long term. All right. All right. So we had focus on significant rise in non-residential fixed investment as a potential positive counterbalance to some of the decreases that we saw in this report, right? So it's mixed data, right? But that was key. Okay. And I'll make sure I save this and send it out to you guys. But just to go through this, right? I hope you all don't mind, just to go through it to kind of get an idea of what do these reports really mean. It's just not a red folder. Okay. It's not just a red, this means something, right? What's making the market move? And the smarter we get, right, when it comes to these fundamentals, the better we'll become as traders. You're welcome. You're welcome. So there's a lot in here, right, that I've broken down. So I'll make sure I save this and get this put into the Discord. Everything here you see here, residential fixed investment, is the money spent on building and improving homes and apartment buildings. That went down, right? So it was a mixed report. Okay, private inventory investment. Okay, businesses maintain inventories of goods that are either raw materials, work in process, or finished goods. If a business increases its inventory, it's considered an investment because they expect to sell these products in the future. A decrease in the inventory may suggest businesses expect lower sales, or they are managing the inventory efficiently in response to demand, right? So it tells us about the demand at this given point in time, right? We saw a decrease in private inventory investment, but that non-residential fixed investment is saying that, hey, there's still confidence in the future with this US economy, okay? So we're looking at a correction on the dollar right now, okay? We're looking at correction on the dollar. So it'll be interesting to see where we find support. And if that dollar continues along its upward path after this correction, right? So I don't think this correction is a long-term thing, right? At least not yet based on that data. Any questions on any of the fundamentals? No. All right. All right. So let's get ready to dive into these charts. Take a look at some of these setups. And before we do that, let's take a look at Thursday. What do we have coming up? Oh, we got core PCE. All right. So I'm leaning towards a pause in September for the US Fed. Let's see what happens with this PCE, this core PCE. Okay, because this is preferred, right? So this is the preferred. So as a matter of fact, you can see, right? It's the Federal Reserve's primary inflation measure. It's important to current inflation is important to currency valuation because rising prices lead to the central bank to raise rates, out of respect for their inflation containment mandate, right? 2%. So this differs from the core CPI in that it only measures goods and services targeted towards and consumed by individuals. Okay, so this is their preferred report. So this is going to be a big one tomorrow. We expect 0.2%. Let's see what happens. Right? Let's see if it comes down. And then Friday, of course, we got non-farm payroll, Canadian manufacturing PMI, ISM manufacturing PMI too. And then on Friday, we've got the CPI for Switzerland, which is going to be a huge report too. So a lot of good stuff going. 102 for the bounce. Think we get a bounce PCE tomorrow? We could, Reese. I'm interested to see what that comes out, how that comes out. If it comes in below forecast or not. We could. It depends on how the market is going to take it. So if we're right on, no, because leading up to that report, right? We've got data like that JOLTS job report that came out, showing a decline, showing some contraction. The ADP is showing some contraction. The GDP that just came through overall, it was mixed, but it did come down from 2.4 to 2.1. So we'll see if that falls in line. If it comes through and it shows some softening there, the dollar might keep dropping for a little while longer. All right. So we'll see. The devil is always in the details with these reports. So we'll see how it all plays out. Think we may get a bounce from PCE. We may. Let's see what happens. It's definitely a possibility. All right. I definitely don't think it's any, definite time for the dollar or anything like that. None of those type of crazy scenarios. All right. Ryan, good evening, sir. How are you?
Good evening, bro. I'm doing well, man. How about yourself?
Doing pretty good, man. Rocking and rolling. Busy as ever at the university, but this is my happy place.
Yeah, man. I know you've been flying around, dude.
Yeah, we've been humping. Jeremy, you got a 80-20 on the DXY. What time frame are we talking about here?
Daily.
Daily. You running it off the low?
Yes.
Yes, sir. Yes, sir. I love it. I love it. Let's see. Let's see what happens. We took out the high. That's a deep pullback there. That tip should be interesting. Appreciate you calling that out, Jeremy. Never fails, does it? Of course it does sometimes. Not all the time. All right. Some interesting cards on bridge today. What effect do you think it'll have on the dollar long term? Nothing. Nothing. I'm trying to figure out I'm trying to figure out the details in regards to the overall commonalities between the nations, right, involved in BRICS. Yeah, that's what I'm looking at too, Jeremy. That'd be a decent decline there. Right here is what Jeremy's talking about. Those I'm trying to figure out what the common, because we know with the West, you know what I mean, what the commonalities are. You know, and it's been that way for a long time. But when you have things new like this, it's like, okay, you know, you had China key player at the forefront, but then he had to walk into that BRICS meeting with some drama on the table for China right now. Economically, you know, I heard India stepped up to the plate, you know, in some regards. So I say nothing, right? You know, because it just, I don't know. It's really too early to tell. There's a lot that has to come together for that to have a major impact on the dollar. You know, they got to agree on some things, you know, before you try to take that dollar out of circulation in regards to being the reserve currency and get all your major commodities being traded through the US dollar. You know, so it's early in the game. It's a great question. All right. Nowhere near you know, I definitely don't have an answer quite yet on that, but it's interesting. Right? It's interesting. The world goes round and round, and the only thing that's constant is change, my friend. So we'll see how that plays out. We'll see how it plays out. Yeah, I see that, Jim. I see it. That crown potentially. It's a long way. We'll see. All right. Any other questions on the dollar? Where we are? Okay. All right. Nope. We good. All right. So let's dive into some charts here. Let me scroll through and look at some things. I want to take a look at these euros. Where we are in regards to this Euro Aussie, it is doing the dance. All right. I mean, we got a counter currency that's not the strongest currency in the bag. We know that we're making higher highs and higher lows. This is a correction play on the lower time frames. We've got a new AB boundary here on the daily. And you can tell from the higher time frame, this daily chart, that's exactly what it's doing. It's just dancing, right? That's a range and consolidation. And it's playing out. We'll go back down to the one here in a second, but you can see where we are. Okay. We hit that 118 zone. And right now, it's come down quite a ways, right? It came out of the zone. And right now it is struggling to find direction. So over 300 pips, then we push sideways. Okay. Then we push sideways. So it needs to make his mind up. Somebody's got to win. And if we go down to the one where we drew up that smaller play for, you know, another possible entry on it, it is just dancing, right? But it hasn't taken out the egg. Right? Hasn't taken out the egg. So what happens in this situation, right? We pulled right back to 8-6 retracement. So we still have that 118 target, right? For this fib here, this current fib here. And then if you scroll down a bit, you can see this 4-hour TP1. Right? It's way down there. But it's just doing a dance. Okay. Now, these type of scenarios, right, I used to love to just get out of it. But what I found out, and the reason why I was jumping out of a lot of these setups when they start dancing in between the AB boundary like this, is because I was over leveraged. And I was losing patience because I was so over leveraged that it was tying up my entire account. And I said, you know what? I'll just take the loss. There's other opportunities. I'm just going to chop it up, take the loss. You know, I can't add on to this trade because I'm over leveraged. So I can't go just jump in other positions. I'll blow my account completely. So I'll just take the loss. even though I had my stop above the A, right? I wasn't in at a 1/4%, 0.5%, 1%. I'm in at 6%, 7%. Cowboy trading. And I would get out of that trade, and then I would go jump in another trade, and I would lose that trade. Then I'll win a trade on another pair, and then I'll come back a week or two later. I've totally forgotten about it because I'm being impulsive. And the trades dropped almost 400 pips. Has that ever happened to anybody? That might just be my experience. I don't know, but
Definitely happened to me.
yep, yeah. And every now and again, right, it creeps back in. I'm not perfect. It creeps back in, and you learn tough lessons, right? But this is why, Joanne, this is why risk management is so important. You listen to a lot of professional traders, on the podcast, and you'll hear them all say, like, there's a lot of game plans and strategies out there that'll work if you're consistent. And if your risk management is good, if you can consistently find a sweet spot in the market to trade over time, right? You can make money, especially if you're finding a sweet spot where you have a favorable risk to reward. Think about that. You just have to get consistent. And not only finding the setups, right? And finding the setup, that sweet spot that you like, but you have to get consistent at actually taking the trade. And when you take the trade, stay in the trade and be willing to live with the results, knowing that over a series of trades, I have an edge. Right? And that's why my trading data was looking just like this here. Does anybody have a equity curve that looks like this? Right? And you're like, what is going on? Right? Been there. Yeah, no, maybe it's just, but you hang in, right? You hang in because over time, that's how you get consistent data, right? Don't jump in and out. Right? If this was your setup, there's no reason to be out of that trade. Right? There's no reason to be out of that setup. Let it play out. And then the other thing is that I thought I was going to be the first trader to never lose. And I found out real quick that that's not the case, right? I had to learn how to become a good loser. Sticking to the process, using proper risk management, managing my trades well, the ones that go in my favor. Have to be a good manager. Okay. Good steward of the money. All right. Doesn't happen overnight. Right? But it definitely won't happen if you don't stick to it. I can guarantee you that. All right. So that's the it's okay. That's the Euro Aussie. Any questions on that? All right. All good.
No.
So appreciate it. So let's look at the zero CAD trade. It's just bumbling and stumbling, right? We saw it got sideways, right? We got double bottoms, got a little bit of everything going on. So we said, you know what? We had an impulse move down and held at this level again. Hey, we're gonna run this sub fib and just play it off that sub fib. Right? Okay, so we've been long. We got an A6 retracement. Somebody tell me where my D extension should be on this 4-hour chart. What level? What extension number?
1.18.
That's it, right? 1.18, Reese, 1.488. Yep. JC. Yep, we got an A6. Got an A6 pullback. Correct. Got a 1.18 extension on this 4-hour, right? That's what we have it tagged. Okay. Is there any reason to be out of this trade? No. But yet, so often we look at the chart and we realize that we're not in the position, to include me at times.
Benny, can I ask you a question?
Sure.
Can I ask why you're talking about me?
Absolutely.
No, and I say this too. I really was like, what? They must be studying my sessions today. Like I literally just, I was like, I think they creeping on me. Something's going on here. What? Jesus Christ, Benny. I'm sorry. I'll do better. I promise.
Because we go through it too.
We go through it too.
Right? We go through it too. And part of our problem is because we're always on the chart, because we're always teaching. Right? Sometimes you gotta just walk away, everybody. You guys are hilarious, right? We're all family in this group, right? It's the inner circle. We can talk about it, but it just lets you know, right? The thing, if we just work on those little itty bitty things, those little nuances, where could we be, right? Where could you be if you give yourself a chance, 3 to 5 years? Like, where could you be, even with the small account, right? Even with the small account. And let's just face it, if you can get consistent, the money's there. I mean, prop firms back in the day, you bought into them and it was like 70-30, but it was the other way around. You kept 30 and they kept 70, right? So it's like, it's a totally different ball game now. So if you could just focus on getting consistent, I don't care if you're trading one micro lot per trade. If you could get consistent, the opportunity is there like it's never been before. Right? I tend not to operate from a mindset of scarcity, right? More so abundance, right? So it's all out there, right? But this move, right, even off the 61A, okay, it's up 350, right? And because your risk management is so superb, that this doesn't have to be the only swing position that you're in. You could be in multiple swing positions because you've already calculated your risk before you've ever gotten into the trade. See what I mean? So you already know what you can afford to lose. We know what the upside potential is. So you have to constantly fight that battle of, got it in my sweet spot, right? You have to ask yourself that question. Got in at the sweet spot on this trade. I'm not over leveraged this time. Everything is right. It didn't take out the A, because otherwise I would know it. Why am I not in this position? I have to answer that. And you're going to ask yourself that more than once. Multiple times. Right? It is, right? It's a war. Like, everybody talks about the markets and the markets, the markets are out to get you. The markets, this, that. But it's really, right? Joy is alluding to, it's really against a war, a battle with your inner self. And it's not a battle that you win overnight, right? Just not. So we find ourselves, and Ryan and I talk about it all the time, like looking for the new opportunity. It's like, I should still be sitting in the one from 2 months ago. All right. That's the thought. Let's take a look at the Euro Swissy. This has been trying to figure itself out. It's an old crown, right? From a long time ago. Let's take it straight down to the 4 hour. Did we hit the stop? Yes or no? I guess it's relative to where you played the stop, but based on this setup, no. Right. No. So that trade is still active. We trade the zones, not necessarily concerned about all of this. I'm worrying about my risk before I get in the trade. I can't begin to try to figure out and tell you why, like what all this is. I don't, besides it's a mess, it's a big fight between the Bulls and the Bears. I can't begin it. I don't want to get so deep in the candle to try to figure all of that out. I don't care. I need that to go from this 80-20 zone to that 382 before it hits the stop. That's it. That's
Hey,
all.
Benny.
Yes, ma'am.
It hasn't it been like almost a year from that last move when E-Chef had came down to these lows. And
Yeah.
Ryan said, be on the lookout for this E-Chef. It's gonna come. It's
Yeah.
gonna come.
Yeah.
And that joker sure enough had rallied.
Yeah, it did. It did. He did. That's exactly what he said. It is a game of patience. Even though you're lower your charts, 5-minute chart, it's a game of patience. Doesn't matter the time frame. That's something that you have to develop, regardless. Because if you just don't have any patience, even a 5-minute chart is going to be too long. It's going to be too long for you. Right? There's no way around the fact that you have to improve in that area. But that's exactly what he said. So he's trying to figure itself out. It's trying to figure itself out. It's moving up. It's moving up. Any questions on the Euro Swiss? That's it right there. Right. That's it. Maybe we let's take a look at it. Right. Where are we on the lower time frames? If that's going to continue to move up, from that standpoint, right, we can look for potential opportunities. Right. That's a 5-minute, 80-20. Look at it. There's a swing on the 5-minute chart. Because I want this target to move up, I'm gonna take that off and I'm gonna run the fibs off this low. Just like that. All right.
Oh, Benny, I didn't catch that. You said because you want the chart to move up, you're gonna run. Say that again, please.
Yep. I'm gonna run it from the low, right? Because I'm playing this 80-20 off the 4. Right? See that swing?
Yes. Mm-hmm.
We want that swing. So even though, right, this is a down, right, retracement zone. Right? So we always talk about, hey, you just need a little bit of spatial intelligence. That's all to understand what we're doing. So this is a down retracement zone. We know that, when certain scenarios play out like our 80-20, that could represent a low price and we may find the buyers to push the price back up. We're not even saying that, hey, this is long-term bullish. We're saying right now, based on the data that we have, this price is on a correction. And if I'm in a down retracement zone, that means it's correcting up, which means it has to move bullish. So even if I wanted to short this at a high price, I need it to move up first, right? So either way it goes, I need it visually. I'm looking at this to move up, right? Whether I'm shorting it or, I'm buying this correction. So I'm trying to buy it back to this 382. Okay. So here's that 382, 4-hour 382. Right?
Oh, thank you.
Mm-hmm. You're welcome. So this is my 4-hour 38.2 target. And we know that it can push higher than that, right? We've got target 2 at that 618, but we'll focus on this right. Okay. Because we know in the 80-20, we like to at least safely take it to a 382. Okay. So now it depends on what your style is, what's your game plan. If I like trading, the 5-minute, I'm in a situation that's no different than what it would be on any other chart that I trade. That's the beauty of what we do. It's the same stuff. So if I'm a day trader, I'm trading my 5-minute chart. And I like trading 80-20s, then this is a potential play for me. Off the 5. Okay. Need this to come down. Target 1, 32 pips. 44 pips. Target 2. I need a stop. I'm either gonna leave that stop wide and put it at the D, because it's kind of like, hey, like we always say, if price doesn't take out the A, it has no choice but to go your way. But if it doesn't hit the D extension, the other place it can go is sideways and then down if it's not gonna hit this D extension, right? So it kind of just all makes sense, I guess, right? So if I like trading on my 5-minute and I like counter chin trading the 80-20, then I need to see this trade go just like this. Boom. And I'm shorting it. And either I'm leaving that stop wide or I'm putting it above the high. Right? Maybe you want to be more precise, more tighter. I use a trend line, let the high form, and then I'll put a trend line, let it break trend line. And then I'll short. So maybe my stop comes right over the high like that. I like it tight. Okay. But you leave it there. We're in the 80-20 zone. You look at what's that? 21, right? 30 or so, almost a 1-to-1, right? Depending on where you get in. But that's the game we play. Okay, we know we're not getting crazy 3-to-1s, 4-to-1s necessarily if we're using a wider stop. Right now, you bring that down, you increase your risk to reward significantly on this counter move, but you also increase your chances of being stopped out. All right, so that's where we are now. If I trade the 5, I'm trading with the trend, and I'm following that path up to that daily 382. Then guess what? Just like we just set out the 4-hour chart, I need the same to happen. Whether I'm shorting this to these targets or I'm looking to trade with this uptrend potentially to move up to that 4-hour 382. Guess what? I don't want to buy it here. I need a discount. I want a 61% discount. All right, on that at least. All right. I get a 78.6% or 86% discount, I'll take that too. Okay. But I want a better place to buy. That's what the fibs represent. And I'll either take it here, I'll trade it, retracement level to extension level, or this will be my initial entry for the ride to the 382. Right? However you want to play it. But it is literally everybody. If you go back and watch our videos, if you watch the train, it is the same thing. Price at the A is 95.32. Okay. It's 95.32. Okay. So you can just continue to move down through your waves, right? Or I'm on this higher time frame is not making sense. Can't get in there. But let me just go down through the charts. I'm just trying to catch a wave. All right, that's it. You're welcome. That's it. So that's where we are on the Euro Swissy. We're still trying to get to that target. It's been a wild ride, but we're still trying to get to that 382 target. Yeah, let's see what happens. And that's all you can do is consistently put yourself in the same scenarios that give you an edge. That's it. We don't control anything else. Right? Besides the power of just not taking a trade at all. All right. Any questions on the Euro Swiss? All good. All right, squad. Let's move on down. Let's go and take a look at the Euro GBP. See what we got. Trying to find some footing. It's just bouncing. All right. Bullish. All right. This week, last week, and this week. Trying to make some headway. All right. Here we are. Yeah. I just been looking at this on the higher time frames, just support and resistance. Because it's doing the most. So bring it on down, right, to the 4. That's running off the high. Ryan, how'd you have this running on yours?
On the Euro GBP, coming off the top I'm coming on the daily. I have it running from the low.
Okay.
On the 4, I do have it running off the high, but it's the high at like July 19th, 86,974.
Mm-hmm.
So that over to your right. So keep
Right
going
here?
over right. Yep. Oh, back
Okay.
to that. Yep.
Okay. I see what you got going. So I've been primarily just focused on this range, right? See how it keeps coming out of this zone. So I'm wondering if you're coming off of this one right here. That's August back here.
Yep. That first one. Yep.
Yeah, I see what you got. I'm not trading. I'm just looking at it. I just
Yeah, on the daily, that low is like a 786 retracement.
Mm-hmm.
On the daily. Yeah, 786 retracement at a weekly support level. So yeah, I ran it off the low on that one.
Yeah, right here.
Yeah.
Yeah, I've been mainly just focused in on that range right here.
Yeah, I feel you on that though.
Yeah.
Nasty.
Mm-hmm. But I guess, and when you start getting fibs popping both ways and that you're just ranging really. You know what I mean? That's all.
Mm-hmm.
That's all. So either way we go, we can make a play. Either way it goes. So like this, I'm just right here, right? It's three times it's holding. It's trying to do something. But I just want to see a little bit more momentum. Here we are. So sitting right in that zone. So this will be interesting to see if it can keep this momentum going long off this latest push. I don't know. Right? Maybe we somehow we whip and we get to that D extension, right? We get a reset, then I'll probably entertain it going long. Especially if we get above that 86.36 level. No play. It's fun to watch and look at though. That's it on the Euro GBP. I don't know, I might retire from that one for the rest of the year. But yeah, So let's take
That might be how long it takes for it to make a decision. So it might be good.
Keep that there. Tell you that. So this is the monthly look at the Euro JPY. Right. Straight through that level. Right. Finally got it. There we go. New AB boundary here. Stochastics in the buy zone. Check this out. That was that previous. That's that monthly extension. If we push up to that 118, 127 zone, what we look like on a lower time frame. Good, we got a new fib finally. There. See what we got. Man, that's running. Get that out now. This is over with. You know, we got a monthly D hit. That might push all the way to that extension. What do you think on that one, Ryan?
That's what I'm thinking, man. I had that small short position there, got stopped out on it. I do think it's going to continue to run top side. Yeah, I think that 4-hour D extension gets hit, and we might even push. By the end of the year, we might get to 170.
Yeah. What's this? This is 163.31. Wait to see if we can get a push up to that. That'll put us in an 80-20 scenario on a daily.
Mm-hmm.
Definitely be entertaining that one then. What we got? This is right on it. Now I marked this one up and completely missed it. Did anybody take this long off the one? I don't even know what I was doing.
Oh, I thought you took it. No, I didn't.
Well, I had the prior fib. I didn't play this one. Anybody, somebody please tell me that you did that. No? I'll take it. Yeah. Yep, I got a this last fib, right? We were closing in on that higher time frame monthly extension level. But when this pulled back like that and held, that's a good play. Well, it's running now. So we'll wait. No play on that one quite yet. No play on that one. So we'll continue to keep an eye. That one's off and running. Now, let me see. Run into that extension. Because this is gonna be to see what it looks like on a time frame when it occurs, but this is a new low, right? So if we continue to gain momentum here and we hold, this B boundary holds, I might entertain that. Some type of a retest off of that, right? So if we get it pushed off of this level, right? Because you see it's coming down now. But if we get to push off of this level, and retest, right? Like that, then I might be willing to entertain that, depending on how it looks on the lower time frame. Right? 161.97, and then on up into that zone. But this pullback, I have to be at a decent fit level on the lower time frame to really take a look at it. So keep that one. We'll continue to watch, see how that develops. Because I don't I mean, the yen is the yen, right? Right? They said that nothing in the immediate future.
Yeah, nothing in the immediate future. More looking to potentially end the first quarter.
Mm-hmm. So I look for to continue to make runs. We might not get a deep correction on this daily fib until we start to move up around that level. So I'll definitely look for good setups, right, on the lower time frames that could take us here, because up to that
Yeah, I'm with you.
600 pips. You think that's cool? Yeah. So we'll see. We'll see how that goes. Yeah, I'll be willing to play around with that. We'll see. Give it some time. Give it some time. All right. So that's that on the euro. Yen. Let's take a look at this euro NZD. We'll finish up with the euro dollar. All right. Push along. Okay, that's the weekly. And don't give. I think that's going to the extension, everybody. Where are we at? Let's see. That's off of 382. 200 pips away. I don't know when I was looking into this correction, potentially, to move back down. That's just a bunch of mess right now. They moved all types of crazy. They're choppy. I don't know which way that's going to go. A correction down would be nice, because then we can look to buy off the correction if we get that push up, right? So definitely hands off of this one for right now. If we get that push up into that zone, that's a daily D extension that'll be hit right in the 80-20. So then we'll definitely be a high alert for that for the correction. So we either needed to move up to that 80-20 zone, at least that's how I'm looking at it, or we need a correction down, right, in the near future to give us an opportunity to buy that back to the extension. Any questions on the Euro NZD? That's the no man's land for me right now. All right. Good. Okay. Euro USD. Oh, we know that the DXY is heavily weighted by the euro. Almost kind of like looking at the DXY in reverse. So we're out the gate bullish so far this week. Okay. We've been asking ourselves on this daily chart, okay, are we gonna continue to make higher highs and higher lows? Got a little worry here, right? Because we broke that low. So we're moving bullish now, but does that move up to retest that 110, which that's the key level, to form the right tip of a crown before we drop? I don't know right now. I don't know. I do know as of right now, this is bullish. So if we come down to the one and how we had it drawn up, it is running long off the zone. Maybe we stay bullish again to that 110. Right? See how price reacts. But bullish on the euro dollar. That's a good play right now. Out of the zone, right? Just trading your sweet spot. If you're bullish, if your bias is bullish, that means that you found a low price and you're up 150 pips or so. And we look for price to continue, at least up to that 110 level. Okay, so here we are off the 4. So we'll see how much the dollar wants to correct. 4 hours, right off of 61.8. Something about those zones, man. Anybody playing this long?
I am.
Okay. Okay. What'd you say, Jeremy?
No.
No. Me either. But if that's gonna get long, it's gonna continue. So we always had the opportunity for pullbacks. See if we can get a continuation. This is 5. I like to see that come back down, right? To the zone. Man, that's a funny looking setup. 70 pips or so. So let's see if we can get price to correct. That's 5-minute euro dollar. Any questions on that? Right now it's bullish, right? We saw earlier, we started out with the DXY. We know we're getting a correction off the fundamental data that's coming out. Keep in mind, we've got non-farm coming up on Friday. ISM manufacturing data as well, right? So we can have a pretty decent Friday in regards to volatility, at least early, right? Before things taper off afternoon. Okay. Any questions on anything that we covered tonight before we log off? Continue to be patient. Find your setups. Right? We're already through August. We're moving into September. Okay. Think of some of those major plays that we've seen, right? You all have been here night after night, morning after morning. Okay. Think to yourself, why am I not in those setups? Right? Doing everything that I'm supposed to be doing. Am I being as patient as I could be? Am I using proper risk management? Am I managing the trade? Okay. All right. Appreciate it, JC. Ryan, anything before we wrap things up, sir?
No, sir. Great session, man.
Appreciate it. Appreciate it. Now, I will know, Ryan, I had a chance to talk to you about this tomorrow, right? We'll send out an email communication. I got a huge event tomorrow that I'm hoping to be done before our time. So just keep an eye out, guys, on communication, but we may have to cancel the evening session tomorrow because of the event that I have. So I'm hoping that it doesn't, but I want to give everybody a heads up on that. All right. So appreciate it, Michelle. Appreciate the feedback, everybody. Ryan, 6:30 a.m. Eastern Standard Time tomorrow morning.
Same time, same place.
All right. Let's get it. Have a good night, everybody.
Thank you.